Good afternoon and welcome everyone to our Council of the Americas Symposium panel, Tech for Good. My name is Mariel Teran and I'm Vice President of the Council of the Americas office in Miami. Today, we have the pleasure of hosting a great group of business leaders to discuss the latest financial technology developments in Latin America and how these technologies are enabling citizens across the region to gain a wider access to goods and services. We have the great pleasure to have as our guest moderator, Gabriela Frias, anchor, CNN en Español. Welcome, Gabriela. It's always great to see you. Before beginning the panel, we are thrilled to announce that our Bravo Business Awards, which have been recognizing excellence in leadership in the region for over 26 years, are returning in person for a very intimate dinner on November 12th in Miami. We will be honoring 3 impactful business leaders for their valuable contributions in the Americas. All of you will receive information by email, and we hope you can join us. As a final thought, I want to thank our sponsors and partners. You have stayed with us throughout the past year and a half, which has been quite a journey. So thank you to Bank of America, the AES Corporation, Microsoft, Mastercard, Salesforce, SAP, Softec, Chubb Latin America, Diageo, Greenberg Touring, it's a long list, our partners at the Inter-American Development Bank, and media partners, America's Quarterly, CNN en Español, and the Financial Times. Gabriela, really, it's an honor to have you. We know you're very busy. The floor is yours. Thank you.
Thank you so much, Maria Lourdes Teran. I'm delighted to be here on this occasion to talk about this. Is such an important and critical topic and a critical time, importantly. I was remembering that it's been over a year since a wonderful effort was launched within the private sector aimed exactly at accelerating digital and financial inclusion in Latin America and the Caribbean. When I first got to CNN a long time ago, over 20 years ago, it was just the beginning of a bigger effort. And now that COVID-19 has accelerated many of the trends that were just beginning, or we were just looking at, slowly developing, we have to know exactly what's going on. We need to take a picture. We need to have the input of these wonderful panelists that are going to be with us for the next hour and 15 minutes. We're here to talk about that year past and the fact, and this is amazing data, nearly 40 million people have become banking only the past 5 months. 40 million. Of course, the big question is, what's the plan now? How do we broaden the use of digital banking? And let's just give this thought to everyone. If financial inclusion drives economic development, and there are strategies being implemented to increase the population's use of financial services, especially digital financial services, what are we to do to help it? Is it on the supply side? Is it on the demand side? What type of business models and joint ventures and alliances between the private sector or authorities or the government and the private sector are good examples for the region? This afternoon, we have the pleasure to speak to Kiki del Valle, Executive Vice President, Market Development for Latin America and the Caribbean at Mastercard. Kiki, thank you for being here. Federico Gomez Schumacher, Vice President for Latin America for PayPal. Leopoldo Martinez, Global CEO of Superdigital. Hello, Leopoldo. Mariel Beasley, co-founder of Common Sense Lab. Amazing to talk about behavior and what we learn from the people and users and small and medium-sized companies. And myself, I'm going to be moderating this session. And I think that the first question for me would be, what can you tell us? What have you learned so far in the past year after this effort has been launched? Kiki, if you want to start.
Sure, and thank you for having us, Gabriela. It's a pleasure being here, and welcome to the other panelists as well. Pleasure sharing this with you guys. You know, Latin America has been a region of long-standing inequalities in terms of income, access to public services, financial inclusion, and even gender. And what has happened over the past couple of months with COVID is that all of these inequalities have actually been exacerbated. All of these gaps with digitization being a critical component in the fight to inclusion. So what we have seen across the region, we saw how the COVID crisis accelerated trends that had been underway for some time, but that certainly, and to some extent, certainly yielded a rare bright spot for the millions of people who were long excluded from traditional banking services. now being included into the financial system using digital banking tools. So as you mentioned, the idea that we have now 40 million people, that was a study that Mastercard did last year, that was in the middle of the pandemic. That number has probably, we know, has actually increased even from numbers that we're seeing in Mastercard now. The shift being facilitated in grand part by the accelerated development of fintechs and digital applications, wallets, social platforms, gig players, leveraging embedded finance, definitely driving a lot of this growth. And also the digitization of SMEs that we've seen across the region. Governments played a key role as well in this shift, providing emergency assistance, not just once, but at different intervals throughout the last couple of months, which led to an increasing testing of platforms and also use, which is critical for how we need to solve for the inclusion problem. So as we look at the impact that this is driving, it's an impact that we have seen in access to getting more people into the financial system, but many are still being left behind. Vulnerable countries, marginalized populations have suffered plenty from the pandemic. And where the opportunity lies and the focus should be is in ensuring that the impact of digitization is benefiting society as a whole, using those innovative technologies as a bridge for those in the base of the pyramid and the lower base of the pyramid, instead of actually creating a digital divide. So there's still much work that needs to be done. We believe that digitization is actually helping bring, in many ways, improve the quality of life, bring citizens access to public services, allow governments to be more efficient. But there's certainly much more work that needs to be done, and the public as well as the private sector need to play a role.
Let me go to North Carolina. Mariel, Beasley, explain to us what you've learned, the knowledge you've gotten after what has happened in the past couple of months or with COVID-19. Again, are we talking about just trends accelerating, or are we talking about behaviors that are new and that are, opportunities for companies like Mastercard, like PayPal, et cetera?
Yeah, so first of all, thanks so much for having me. Really an honor to be a part of this phenomenal group to chat through these things. So we are a behavioral science research lab at Duke University, and we really kind of focus on sort of what influences people's decisions and behavior. And one thing that, we've known for a long time, of course, is that major disruptions are moments of behavior change. They're moments of habit change. And there's lots of studies that show this. And the pandemic has been no different, right? It's actually, it has increased digitization, partly because people are unable to go to a branch or they don't feel safe to go there. So it has really driven more people to sort of adopt digital tools. But also, even from a sort of a psychological perspective, it's had real impacts in that it has really heightened a desire to save, to prepare for emergencies. Emergencies are on the brain for folks, and sort of this real desire and sort of increased sense of urgency to try to reach some financial stability. So it's sort of really driven in and changed behavior in multiple ways. And one thing that we've also seen is this increased desire to save, and similarly a decrease in spending. And that obviously is always kind of a bit of a double-edged sword, because spending is important to local economies. But it has also been a way for folks to kind of rethink their own personal spending habits and adjusted some of that spend, which may actually take a long time to sort of for folks to kind of come out of and go back to, and hopefully some of those habits they'll hold on to, like choosing to prepare healthier foods at home rather than sort of going out and spending often. But essentially, we often joke that the best time to be an insurance salesman is after a flood, sort of a flood insurance. And so actually the best time to be in sort of digital banking services is right now, because there is this incredible increased appetite for people who are looking for not only how to get the general banking services in a digital format, but also new and creative ways to help facilitate that behavior within that digital system. It's not just about connecting to products. It's also, folks are also looking for, a more proactive help in building that savings, managing debt, planning for large purchases, handling sort of the up and down sort of expense and income shocks that everyone is facing. And we're seeing that real increase in demand.
Lastly, SMEs, small and medium-sized companies. I'm aware that you are researching exactly those behaviors in a specific market. Isn't that so?
Yeah, so we have over the past year, we've kicked off a partnership actually with Mastercard, looking at basically the financial vulnerability of SMEs in Latin America, and how can we sort of help them prepare for the next pandemic as well as recover from this one. And so we are actually partnering with a number of sort of platform providers that provide services to SMEs, which sometimes when people think of SMEs, they're still thinking of businesses of 50 people, but in many cases, an SME is sort of a single person. It might be a single Uber driver. It might be a single person who's selling things in an online marketplace. And so really looking at the pandemic has obviously, for folks who are self-employed as well, caused a lot of sort of instability, as always. And so we're really looking at how to drive short-term savings, insurance, and also sort of protecting inventory for sellers as a way to essentially protect their income also in these shocks. And again, we're seeing a lot of appetite from platform providers to solve this issue for their SMEs, because they're aware and they're hearing from their users that this is a challenge.
Absolutely. I think this is a great segue to ask Federico about what you've seen, and of course the trends that you can point to after these many months of COVID, vaccinations, and now Latin America, inflation and whatnot. So please, welcome.
Thank you, Gabriel, and thanks for the council to inviting me to another event. I mean, start with the obvious, right? I mean, the volumes, the increasing volumes has been absolutely incredible, right? I mean, to a point that, last year, we didn't think it was possible for things to grow that fast, and they did, right? So the first trend was that of just immense acceleration to something that was happening already. And then going back to, you were asking about small business, SMEs. I think that's an area where we saw particularly big changes, right? Because it went from many of them not dealing with any digital type of digital transactions, digital payments, right? Which is mostly what we do, to having overnight to adopt these technologies, right? And I think the positive part is that for a large group of them, it was actually within the technology was there, right? So they were able to immediately move and start accepting payments online, right? For many of them. For others, also I think as Kiki was saying, there is still a digital divide, right? Because they're still used to doing business in a certain way. And one of the trends that we had seen in the past, and it's still evolving and it's not quite there, particularly in Latin America, is the idea that customers now want to interact with merchants and businesses in multiple ways, right? Meaning I can have a physical store, which now hopefully is open, right? And then there is a way to interact digital payments even physically in the store, versus other customers which may not want to even go to the store but still want to interact with a business, right? So we have seen large, very large merchants navigate through that, and millions of dollars of investments, right? But the key question is how do small business can access some of that same technology, right? And that is the big challenge for everybody, right? Because I think the other key point that we've learned in this period is this is not something that's going to be, so financial inclusion is not something that's going to be solved or by just a group of companies, right? It's not for financial institutions only to fix this, right? It has to be a strong alliance between governments, companies, even academia, right? There's a lot of interesting research that needs to happen. like one of the things I've learned, and we've been working with Mastercard and other companies in understanding this, is financial inclusion doesn't mean that somebody just has a bank account, right? Again, Mariel was talking about the shock that happened, right? And financial inclusion also means that as a person, I may not have a lot of savings, but if I do have access to a credit when I have an emergency, that is still financial inclusion, right? So it's in many angles that it needs to be seen, financial inclusion. And that's one of the first things that I think is really important for all of us to understand what exactly is financial inclusion to then attack the problem.
Oh, interesting. You're living it in a very interesting position when we could talk about what is financial inclusion nowadays. Leopoldo, do you see it the same way? Welcome.
First of all, can you hear me? Yes?
Yes, we can.
Thank you very much for the invitation. I'm super glad to be part of this team, this group, with such extraordinary people. And yes, I agree, 100%. I agree with Kiki, with Mariel, and for sure. And also, from our side, considering that Superdigital is a Pagonext company, empowered by Santander Group, we need to do our side as well. We need to do our work. We need to participate in the component, and we are willing to move forward in not discuss only financial inclusion. I think that we need to evolve to an economic inclusion model discussion, where we can identify new pools of income for a super large group of people, and also super agreeing with Mariel. We need to understand how better support this group of population to adjust and to be more like, to have more dignity in their spending and habits. Because actually what happens, and the things we are studying and learning a lot, is they're spending money and the way they are consuming things, it's actually more expensive. Because the chain from the industry until achieve this kind of population, it's too big. So and for sure, we need to work together in collaboration with governments, companies, and public sector and regulators to achieve it. It's not going to be individual initiatives that's going to actually drive economic inclusion across Latin America. We are talking about around 300 million people between low income, underbanked, unbanked, and vulnerable people. And what we understood is that this kind of situation where people are trying to find an additional, could be small, sometimes big, new pool of income to complete the monthly basis spending for their family increased. So that's the perspective. No, that's the perspective. I think we learned that we need to move forward from financial inclusion or digital inclusion, from financial services to an economic inclusion in a more broad perspective.
This is the cynicism in me as a journalist. We've done this for years. What don't we know now, and especially because we or you as representatives of your companies are already working with authorities in Latin America to develop certain projects, to develop knowledge. What more needs to happen? What exactly do you need to really talk about an effective collaboration that doesn't only mean financial, but economic inclusion? I know the question is broad, But
Yeah.
you can definitely point to examples, countries, projects within the region as good examples. So Leopoldo or whomever, you can raise your hand like in classroom. Whoever wants to take the shot, please go ahead.
I can try to take that one. You know, and I think I fully agree with Leopoldo and also with Federico. You know, when we talk about financial inclusion needing to move or needing to accelerate in a different way, at least in the context of Mastercard, we think about the impact and the benefit that financial inclusion brings to the individuals, but then also to the economies as a whole. You know, for individuals, and Mariel actually touched on this one, the access to credit for emergencies, for needing purchases, a path to savings, you know, managing risk for future shocks. I mean, these are things that are obviously beneficial to the individual, but also have an impact to the larger economy. When you consider financial inclusion as a way to increase savings, to expand or reduce the price of credit for investments, for entrepreneurship, you know, being able to actually allocate additional capital for SMEs, for MSMEs to actually run their business. All of that fosters economic growth. I think what we have actually seen over the last couple of years has been this idea that financial inclusion is synonymous to access. And what we're saying we need to actually go to is really trying to understand what are those ways in which you actually drive use and actually eventually drive that impact that we're all seeking for in terms of economic growth. So if you look at it from a sequential manner, you want to bring those people into the system. You want to make sure that they have some means to do their payments, to have some savings mechanism, but also to encourage or facilitate environments in which these people are going to thrive. So the idea that you can actually have not just a social disbursement going into an account, but then how do we actually make it appealing enough for these individuals to pay their bills, to be able to actually use in the transit, you know, in the subway that they actually need to get to work or to actually drop off their kids to school, and also being able to make purchases on a day-to-day basis. These are all use cases that need to be built in an environment type of setting, so that we allow for that use to take place. You're changing consumer behaviors, and at the same time, you're driving that economic growth that we're all seeking for at the end of the day. So the real end state is, and the real question that we all have is around impact. What is the impact that we're all driving for when we're talking about financial inclusion? That's the big question here. All of that needs to be facilitated. It starts with access, but it has to be built in order to change that consumer behavior so that we all benefit. You know, as a region, we all benefit from financial inclusion.
And how also does that convenience that you guys represented as companies during the pandemic and brought so many people along with you as the solution to their lives, how can that remain? What about trust, for example? We didn't trust you, then we trust you. Just speaking about people who didn't use, you know, financial services. Who wants to add to what just Kiki has just said?
I can add. Of course, Kiki says it very well, but maybe looking at it from another angle, because the other thing that is really important, I believe, for financial inclusion is more competition in the sense of more offering for customers, right? Because again, moving from thinking that the problem was somebody gets a bank account and we're all fine, to now saying, listen, this is a significantly more complex and with more variables for financial inclusion than just having a bank account. That means that you want to have a number of companies doing certain parts of financial services extremely efficiently, right? Because part of the problem in the past is, we used to hear, well, it's not profitable to serve customers, right? But that doesn't work. Like, the customers still have needs. But when you have competition and you have a lot greater efficiency in the market, then is when you start seeing, so it's not just competition for the sake of competition, but you start seeing innovation, right? And bringing models to the region that in some cases, we do want to look at what's been happening in Asia. And there may be something interesting there, but the reality is, no, we're not exactly like Asia. So we need to build some of our own models or products to give to customers in the region, right? And that is important. And we're seeing some of that, right? Now, I'm very optimistic, right? Because when you look at the amount of capital that is coming to Latin America right now, particularly in fintechs, it's incredible, right? I mean, and it's still small, right? Globally, it's a small part. For us, it's a lot. And the positive thing is investors are seeing returns, which is good, because then that brings more, that adds competition, more innovation, and you look at it from the side of governments and regulators, they need to promote that, right? On one side, they need to make sure there's they allow for that to happen. Of course, their main mandate is to make sure that to protect customers, right? Consumers particularly, but there is a good balance between protecting and promoting more competition in the market.
Now, who are we talking about here? Are we talking about informal sectors of the economy? In Latin America, we have a huge problem, and maybe they found that solution last year through your services and products. And when you talk about innovation, how often can we brag about experimenting, innovating in Latin America?
Yeah. So far, what I would have to say is we're still seeing the greatest growth in consumers, SMEs that were financially, that had some financial relationship before. I mean, being very honest with you. So we haven't yet seen that huge growth in the underserved group yet. I mean, there is, don't get me wrong, because last year the shock, like the black swan that happened with COVID, did drove a lot of them, but there was no choice, right? Nevertheless, there's a lot of because it's such a big group that when you ask, like, what are we seeing is new ideas to serve customers, right? Like it was not economically before, because we were asking people, you need to go to a physical branch to open an account. Well, that has to be a thing of the past. So now, I was reading like over 90% of the mobile phones in a place like Mexico and similar in Latin America are smartphones. That means, you can do everything on your phone, right? You don't have to go anywhere. And that changes the economic formula of serving customers incredibly. So you start from there, and then you start building all these innovative ideas around this new way of interacting with customers.
And
Go ahead.
Just to add to that, so first of all, Gabriela, I love it when anybody asks about like, well, what's the research, what's the experiments that are happening in order to sort of increase these learnings, and I think that to the points that lots of folks have made, Federico and also Kiki, of course, around we need to be encouraging innovation, and we need sort of more players that are interested in saying, it's sort of this constant problem solving, right? And sort of identifying, this is something that we could do better. How could we do it better? And that means that there needs to be some alignment on what exactly are we measuring to sort of understand success within sort of a research agenda or in sort of any type of experiment. And then what we essentially, this is me putting on my researcher hat, is that we need to also leverage strong partnerships with academia. And Federico said this as well, where, we have tools to understand and measure these things. And we're working with a number of organizations and partners to test these new ideas and measure the impact of them. So for example, we have been running a study with a financial institution in Mexico on their digital platform, looking at how could we help sort of folks build savings through on their online bank. And a very simple thing, we just prompted some of them to just say, hey, do you want to do a flat transfer into savings? This is the standard way that banks encourage savings, and many sort of fintechs in different places are encouraging savings. So for some folks, we prompted that. For other folks, and it was sort of random because we wanted to take out some of the noise of selection. And so for others, we said, why don't you consider saving 1% of every deposit that comes in? And, really thinking about that might be an easier way for folks to save, particularly when we think about SMEs, but even other people who have variable income, where maybe 1 month is much higher than another month, that actually saving a % of income might be better. And what we found so far, and these are, preliminary results, but what we found so far is that save as you earn, and sort of as that % transfer, basically increases savings rates, that people have sort of a higher intention to save, and then the actual savings is also higher. And so these small changes that is spurred through that innovation, through those research questions, and then using really rigorous methods to measure that, is sort of ways to get this sort of continual progression around financial inclusion. Because as everyone has said before, it really is not just about connecting people to a product or a service. It really is about understanding and encouraging people to use those products and services in ways that increase their outcomes, and outcomes that aren't just business KPIs, but outcomes that are actually important to the end user. Things like increasing short and long-term savings, access to credit when they need it, increasing earnings and sort of investments into their future, managing expenses. We have another project with Mastercard, actually, and a Mastercard partner, where we had done a prior study with a different partner, and found that the traditional way that fintechs are doing budgeting is not effective. It's not actually changing spending at all. It's not helping people understand their finances. And so we have, in partnership with another fintech and Mastercard, we've redesigned their budgeting platform, basically to help people understand where their expenses are today and how to appropriately use that information to plan until their next paycheck. And that's in the field now, so I don't have results yet, but we'll be excited to share it with you. But there's lots of innovation that's happening, but it is through these really good concrete partnerships with organizations who are excited and innovative in problem solving, and then researchers who can really look at it and understand and measure the impact in quantitative ways.
Yeah.
Thank you for that.
If I can
go ahead. Yes.
Yeah,
Sorry, Gabriela. I just wanted to add, because I think that the point around data is very critical, right? I mean, I think we're seeing data being used in very innovative ways. I think when we think about innovation, we're actually seeing innovation coming from data, impacting processes, but then also impacting not just one sector, not just fintechs, that are actually stepping up and developing new business models. We're also actually seeing innovation even coming from the government. So one of the things that we have done at Mastercard, as of late, and this is actually addressing the women's segment, women being one of the most disadvantaged sectors of the population as of today, and obviously one of the most impacted because of the fact that they had to leave the workforce in many ways to obviously take care of their families, take care of their kids, take care of their elders. I mean, so women, for example, have been disproportionately disadvantaged during the pandemic. We have just finished a pilot on sex disaggregated data and how to actually build a business case for lending to women. So actually in support of with some of our financial institutions, and also the Financial Alliance for Women, we actually took it upon ourselves to use sex disaggregated data to understand women needs and behaviors, and thereafter inform the nature of solutions, products, services to truly meet those needs. So basically we know that 80%, or at least according to the Financial Alliance of Women, it showed that 80% of fintech surveyed can disaggregate data by sex, but most choose not to actually use the data. And what we concluded from the study is that women actually have higher credit scores than men most of the time. They actually save more than men. They see, and we still see a gap that is favoring men. So it shows a great opportunity to serve this profitable segment, and even micro businesses. I mean, the inflow to outflow ratio on savings accounts is actually higher for women. So it indicates that women actually are better savers than men. So despite of this, women have consistently lower credit card limits than men. And even when comparing across the same credit scores, whether that is because women may not be asking for additional or increases in their limits, or if it's actually an issue on algorithms, that still remains the question, right? But at the end of the day, it means that there is a significant case study to be made for investing, for lending to women. So that's just one example of how data can be used, and one that we are getting ready to productize to actually help all of our issuers across the region so that they understand what is their business case for actually lending to women. It's something that we can help with. and one that we're getting ready to obviously help push at a broader scale for all of our customers in LAC.
And Gabriela.
Wow. Yeah, let me
This
just get say fintechs learn that lesson. Like really look at your data. I'm sorry, Leopoldo, go ahead.
No, that's okay. I would like to build on top of the innovation perspective. And I completely agree with the perspective that innovation comes from different angles. And what we are trying to do is to create an efficient and sustainable operational model where we can deliver actually a digital innovation with low cost that could actually be accessed by a very, very low cost. And this is not possible today because if you go through the ordinary cost to income in the ordinary banks, we are talking about 48%, sometimes more. So we are looking for something related to 20% of cost to income. So it's going to be super cheap in order to actually be scalable in terms of relationship with the financial institution, and also allowing the access for new pools of income and new models of spending money, but must be sustainable. And this is the challenge that we are facing, is deliver a sustainable and profitable business for financial inclusion and economic inclusion.
In Latin America, Leopoldo, I was even going to ask you, because I know you're in Sao Paulo. Am I correct? Yes, right. If there were any examples in Brazil that you can just draw upon, so that we can start to be more specific on these ideas, that they're fantastic, but we need examples so the audience can have a better understanding of what we're talking about.
Yes, for sure. And an example: if we deliver government benefit without a credit, allowing people to use the money or even do withdrawal without costs, and helping them to spending better the money, but substituting this kind of withdrawal of money to a very interesting spending within Superdigital Mastercard prepaid card. So we distribute thousands of millions of government assistance, and also allowing people to access government assistance models through a very low cost and profitable business. This is the change in game we are talking about. And when we scale it across Latin America, we're going to be able to access more than 5 million people with a low scalable operational cost for financial inclusion.
We were talking, please go ahead, please.
Sorry, because I wanted to bring an example that I think is interesting. We started, in our case, we started in the US, and we've now moved to Latin America, Brazil, and Mexico. And it's about working capital loans to small businesses, right? And that's always, small businesses, when it comes to credit, they have not really had great access, right, in the past. And you were talking about not businesses of 50 people. We're talking about businesses of 2, 3, sometimes even individual businesses, right? So and linking it to the use of data, right? Because the traditional credit relies on a going to the credit bureau and checking the references, and that's where a lot of the limitations of giving credit in anywhere in the world, but particularly Latin America, has been the greatest. So, but like in our case, we have hundreds of thousands of sellers in Latin America. And when I say some of them are merchants, some of them are businesses, but not all of them, right? But with all of them, we see their transactions. We see what they're selling, how frequently. It's like almost like we see a lot of the cash flow. So when giving a working capital loan, we don't necessarily need somebody else to tell us, oh, well, this business, how long has this business been around? Like what kind of income, cash flow, we see that, right? So we can in many ways sometimes be better at giving a working capital loan to many of these small businesses. So as I said, we started in more developed markets, but we brought it to Latin America, working with partners, and it has worked quite well. Because the other thing that we've seen, right, there's a number of fintechs in the credit space that's what they're starting to do, meaning there's a lot of large companies that deal with small businesses, whether they are, they're distributors, right? So think about, could be a large construction company that has a lot of, small, all over country, like stores that are distributing their products, companies like Uber and Didi, the same, right? So those become almost like a small business, right? And there's needs for loans. So there's a lot of data in there that can be used, and it's being used by credit companies to provide credit much more efficiently than before, because there's this additional data.
I was just thinking about the idea of governments and partners. What you brought it from the United States and into Latin America. What made it work, would you say?
Well, I think that, it's interesting because once you get into online space, which is mostly where we are, there's a layer of things that seem to be pretty global, right? Doesn't mean that every single thing is the same everywhere. And so going back to my example before, right? So lack of credit for small business, that's a global problem. Like, let's be clear, that's not just Latin America. Anywhere in the world, small businesses struggle to get, so then a lot of them close down because they might have a good product or service, but they can't grow because they don't have access to capital. So that's what says, listen, as a global problem, it's big and it's almost everywhere, right? Or everywhere. Now, how do you exactly execute in each region? That's where the interesting parts come, right? Because as a concept, we brought it similar to what we were doing in the US, but we had to adapt for sure, right? Because in the US, you can go to the credit bureau and you will find a lot more of the businesses, most of them. In Mexico, particularly in places like Mexico, is almost very little. So the decision you have to make has to be based on a different set of data, for sure.
Kiki, I wanted to talk. Please, go ahead. No, go ahead.
If I could just give as an example or talking about why maybe it's not working as we expecting. I think there's a problem of operational model, how to make it sustainable, how to make in a way it's possible to drive business and at the same time increase financial inclusion, economic inclusion, and drive different forms of different ways to spend money. And if we can actually work together to build a very low cost, scalable operating model, it's going to be able to do that.
Yeah. I think the other aspect of it is
Kiki, go ahead.
Mariel, I'm so sorry.
No. You're super excited, so don't let me stop you, please.
No, I think on this question around the government, it's interesting because there are certainly regulatory barriers that we're facing today. I mean, when you think about eKYC requirements, when you think, for example, on digital onboarding requirements, and in some cases, in some countries in Latin America, there is still a need. There is still a need to actually capture physical signatures. It prevents us from actually advancing our digital objectives. Particularly because of during COVID. I mean, those are the hurdles that I think we can look into, and that governments have an imperative need to think of how do you drive innovation, how do you also promote competition in an innovative environment, allowing for more players to participate, for fintechs to compete, but then also ensuring that we take the appropriate steps forward, right? I think governments have the digital agenda very top of mind. At Mastercard, I mean, we have already been signing digital country partnerships agreements with the governments of Panama and Mexico. as they're thinking of the entire spectrum of how do you drive this digital environment, everything from identity to delivering digital tools to being able to safeguard or secure the ecosystem are top of mind for many governments in Latin America. And even there are some governments that we are lucky enough to partner, I mean, where they're taking it even further. They're trying to build virtual tools for people to partake in the digital economy. We have Leopoldo just we are partnering with Superdigital on this one, but we just signed a couple of months ago the Regional Alliance for Digitization of Women in Latin America. This is actually a multi-stakeholder partnership with the Ministry of Women and Gender Equality in Chile, but is supported by Uruguay, by Mexico, Costa Rica, Panama, with the UN Women, and also Microsoft and ECLAC. So it is a multi-stakeholder partnership. The idea being that you have a platform that is facilitating networking, that is facilitating mentorship, but also in providing education for women, as women tend to actually work better when there's a network type of environment. But it's also allowing for trade. So women will be able to sell all of their goods on this platform, and they'll be able to actually facilitate cross-border payments and commerce from one market to the other one. Those are the things that, at the direction of the Ministry of Chile, the Ministry of Women and Gender Equality of Chile, we're partaking because it is important, right? These are the barriers that we need to obviously remove. That effort in and of itself is going to be impacting close to 4 million women across the region. And that's just with the markets and with the countries that we're currently working. We're still talking to other countries in Latin America to get to participate in this initiative. So that's a big one. And Superdigital obviously is going to be providing a lot of the payment tools for that to take place. So even if you have commerce and you need to have a mechanism to remove those funds from the tool that will actually go into a Superdigital prepaid account. That may be the first entry into the financial ecosystem. So these are the type of initiatives that we're working on to make sure that we move the needle in Latin America.
I was just gonna go into the innovation segment from governments because I wanted to know exactly what you meant. Governments that are innovating. When you talk about innovating, is it on the mindset? Innovating because they're thinking that they cannot do it alone. Innovating, so in Latin America, I think that it's very important, especially after so many years of, being distrusting, not trusting your partner. What describes that innovating or innovation mindset from governments in the region that you're seeing so far?
Can I jump in?
Yeah, I'll throw it to you.
Please,
Go ahead.
anyone.
Okay, I think this is a wonderful question, actually. And I believe they are moved forward. They're doing great things. An example, I had the opportunity to participate recently in the World Economic Forum roundtable with the regulators across Latin America to try to increase or even foster the economic and financial inclusion in Latin America. And we discussed a lot about lots of things in terms of regulatory resilience, data populational and data protection, infrastructure, and operational complexity across Latin America. And one of the things I believe that changed in the discussion that I used to have before, and I'm seeing and listening right now, is the customer centricity perspective. Regulators now are thinking about the customer, the population, and not only to protect the system. There's something more. There is a concern and a legitimate concern about how it will impact the real population, how it will impact the real customer. And for me, was like music to listen from regulators. They are really concerned, or they are really thinking about the customers. And as an example, I can bring Central Bank of Brazil, Brazil Central Bank, and the PIX initiative that actually disrupted the market, making payments for free. So it's going to be a game changing. That because here and together with Mastercard and Kiki is a super partner for Superdigital. So we are trying to build a scalable, sustainable, low-cost operating model. Because if you don't do that and make it scalable for across Latin America, for lots of countries, it's not going to be sustainable. So for the regulatory and government perspective, the new ways of thinking about the customer, about the population, about the person, for me, it's the biggest change that we are listening.
Wow. Federico, have you experienced anything like that? I bet you have.
Yeah, for sure. Right. I think listen, as PayPal, we opened or we localized our operations in Latin America 11 years ago. Right. And it's interesting, like 11 years ago, there were very little regulations impacting very few fintechs, if any, and very few regulations that impacted, which interestingly enough, I mean, it has a positive effect, which you also don't have hurdles to, if because an over-regulated market just basically, cancels or delays innovation, right? So definitely regulators in the regions have learned what's happening in other regions of the world, and that's important. And I do agree, right, that they have a vision of becoming whether it's more customer centric or more customer friendly, maybe, right? To understand that you can't have regulations that protect 100% of the people 100% of the time. And I think the other part that we've seen, but I think we're still not there yet is and Kiki was referencing this, right? We need, as I said before, everybody has a smartphone today. There's a lot of things that can be done in a smartphone very efficiently and in a very secure manner. So we don't have to ask customers to go somewhere and physically sign a paper or bring an ID because, to be honest, some of those things are actually even more risky than maybe they're being verified by a device. So that is the balance again between protecting customers, which is always important and should be there, with fostering innovation has to be there, and it's changing, right? And I agree. I've heard from regulators it's hard sometimes for them to be at the forefront of innovation. That's not, and they've told me, listen, that's not necessarily our job, right? Like, we're not the innovators. The market is innovating. We just need to make sure that it works, right? And that nothing wrong happens, but at the same time, there's a lot of it every day.
And yeah, and I would add that I do think that it's to what Federico just mentioned. There is sort of this increased understanding, both by government, but also by other organizations and companies and banks and financial institutions, just what friction costs really are. And basically, even what seems like a small hurdle for someone to do something like open an account, like, oh, it shouldn't be a big deal to go to the bank and sign something. And I think there's this sort of increasing understanding that friction costs are real, they're significant, and that even the smallest little hurdles along the way of somebody kind of doing what we think that they ought to for their financial growth, for their financial inclusion, that every single little barrier, every single little hurdle are places where we're going to lose people on this path to financial inclusion. And so I think that there's this real emphasis by all parties to say, how do we make it as easy as possible for people to access good products, good services, and really actually make it as easy as possible to help them manage those things in the way that will improve their financial outcomes. And I think that there's this real opportunity between government sort of thinking through how can they make some of those things easier, and also industry and fintech, particularly within the tech sector, on saying, well, okay, great. Now, what is the front end experience? We often think about any of this stuff as a little bit like a stage production. You need the front experience, right? You need that, what is on the front stage, that is equally as important as what are the light cues that are being called behind the scenes. And so there's and it's different stakeholders that can potentially kind of work together to create this production. And it's PayPal who's really, and Superdigital who really have that opportunity to say, what is the front stage that's ideal for a customer, for a small business to really use these products well, while also then working with, intermediary players, Mastercard around the network to figure out how do we facilitate these sort of the connection between things, and then government on the end to say, how do we make sure that we actually then also have all of the infrastructure in place that needs to happen to facilitate that front end experience. And I think that emphasis has been something that's been shifting, changing, and is leading to this greater innovation and will continue to lead to this sort of greater use of products.
We have 5 minutes before. Oh, go ahead.
I cannot agree more with Mariel. So, together with that I 1000% agree. So, I think that the complexity of infrastructure we are using to provide this kind of service needs to change as well. An example, when we are building a multi-country, multi-language, multi-currency platform that could process everything in one place in order to control, increase the security, evolve fraud management and monitoring, and protect those people as well, it could help. Definitely. So I think that the two sides of evolve the front end 100%. I cannot see better, or I cannot say better. So that what Mariel said, and but the other side of our infrastructure, operational complexity, and allow it in a very positive way. It's very important as well.
We have 4 minutes to open the floor for Q&A. I had 2 questions, but one will be for all of you to start thinking about 3 things that you need to really make it sustainable. What has happened in the past couple of months with this acceleration of these trends, how do you make it sustainable? How do you make indispensable actors for a customer in terms of the product, the experience? What do you need, whether it's from the government, the regulator, from fintech companies? Just name 3 things. But before I move to just hearing your answers, what about financial education? How has that evolved, and in the efforts of really talking to people about through the experience that it's not only connecting you, but opening a door, a wider door of opportunities, savings, and whatnot. Let's talk about that financial education effort, and then we move to the 3 things that you really need. Whomever wants to start. Leopoldo, you're in the big screen if you want.
If it's all right, I'd like to hop in just from
sure.
a perspective on financial education. This is a little bit of my own soapbox on this. By my own, I mean also lots and lots of research on this that basically shows that financial education is not enough. A lot of times folks are using that and pushing that as a way to sort of get people to save more, manage debt, right? Let's teach people about compound interest. Let's teach people about saving and investing, and let's teach people about how credit works. And basically all of the research shows that the impact of that education is actually quite minimal. And largely this is because it decays over time, right? We don't remember the things that we learned unless we are literally learning them at the same time that we are using the tools around those. So it's really less about just financial education broadly. It's a lot more about how do we build products that build that into the actual everyday use. So for example, instead of teaching people completely separately around how credit works and credit cards and compound interest within that, have it be in the credit card portal, that when you're there to make a payment, that it literally tells you, oh, if you're paying less than your full balance, this is what it's going to cost in interest. This is what it's going to cost over time. This, and making that actually extremely salient for folks. And we really refer to that as this just-in-time education, because essentially we find that financial education on its own, separate from product, has almost no effect on actual changing that end user behavior. So that's my little soapbox around, invest in better products and services that embed that, in it, rather than having these be sort of two separate tangential streams. In fact, I say that every financial institution that we've ever worked with, many of them have sort of the product teams, and then they have a financial wellness or a financial inclusion arm that is sort of supposed to be thinking about these separately. And from a behavioral science perspective, we think that those things actually ought to be one. That having those separate mean that you have separate products. And financial education is not a product; it's a component of existing products.
Fantastic.
And it must bring together the transparency, because Mary's saying about, okay, how can you help them actually telling the people what's going to happen? It means transparency. It means being fair with everything you are dealing with in a daily basis with the customer and the population. So 100% agree.
Wow. Guess what? I have to open the floor for the Q&A because I don't want to let anybody be disappointed that we're not opening the floor. But if at any time you think that you can add those three things that you need, that'll be amazing. Question one, Milene Piselli from Bank of America. You'll ask the question yourself, Milene.
Yes, thank you.
Go ahead. Hello.
Thank you for your insightful comments and for the opportunity to make this question. My question is related to the impressive growth of fintechs and digital banks in Latin America. But before doing my question, I would like to make two comments. So as you know, the Brazilian fintech Nubank is now the largest neobank in the world with 40 million customers, 30 evaluation, being considered higher than the largest financial institution in Brazil, which has been around for more than 75 years. And also Bill Gates in 1994 made a statement saying that the world needs banking, but not needs banks. So having said that, do you believe the fintech startups will replace banks? I mean, the traditional banks? And if yes, why and how?
Just one person answering, please, because we don't have a lot of time. Thank you.
I mean, I can give you my point of view. I mean, I don't think fintechs will replace banks. Just to say and the reason being, as I was saying before, the only way that we're gonna get all of the population in the region really included in the system, in the formal economy, and having financial access. Is if there is a large and healthy ecosystem of financial institutions, and that means fintechs that can do like extremely efficient at giving credit, right, and that can give a credit not at the rates that we've traditionally seen, of 100% APR, which is crazy, but much lower than that. It may also mean that there's certain areas where traditional banks can be the best at doing something. So that combination in itself is a lot more powerful than one group just replacing another.
Thank you.
I fully agree, Federico. I think the answer is no. And mainly because of what you said, Federico. I mean, like the use cases, the ability for the banks to deliver another an additional value, I think it's relevant. Certainly, we've seen an explosion of fintechs across LAC. We see it at Mastercard, whereby now accounts being delivered through digital means have been growing at a 75% rate. I mean, so I think both fintechs as well even traditional banks are investing, are transforming digitally to be able to deliver these experiences. I mean, so I think it's an opportunity for many of the traditional banks to also drive towards this digitization that is so required, but certainly something that we're keeping an eye out. And in LAC, in fact, we're actually seeing the highest growth out of any other region globally, at least according to Mastercard numbers. So very, very encouraging for us in the region.
Thank you. Thank you. Let me go to the next question. And this is Alejandro Anderlich from Salesforce. Alejandro, you'll ask the question yourself. Hello.
Hi, thank you so much for a great presentation. So as we are talking about tech for good, my question will be around responsible use of technology. So I firmly believe that technology has the power to make our lives easier, but it can be a weapon to use it for good or for bad. So as we believe in the need of an ethical, responsible, and inclusive creation and use of technology, we have, for instance, at Salesforce, made a survey with consumers, and they say that they are calling for businesses to create and use tech for good. So as we have to be responsible and lead by example, and considering that no one would have all the answers, and it's a big risk to move fast and break things, how do you guys foresee a multi-stakeholder effort to tackle the challenges of responsible use of technology through a dialogue that would bring together industry experts, academics, governments, and society leaders in the region? Thank you.
Wants to take the question?
I can take it. I mean, I think that organizations as a whole, there's a higher expectation from consumers, and you're right, Alec. I think there's a demand for entities to step up, for entities to actually help in ESG, for entities to help drive more sustainable models. I think for us in the financial services sector, that's where financial inclusion comes into play. But also how we actually help drive ethical and responsible standards, even on data use, as well as our contributions to the environment. We're seeing this movement around the world where entities are now being held to higher standards when it comes to environmental efforts. You know, at Mastercard, for example, we created the Priceless Coalition. We are committed to planting 10 million trees over the next 5 years. Mainly because we want to make sure that we're not only operationalize, or practicing efforts that reduce the carbon footprint, but also helping as a whole the world, the environment, to make sure that we're all moving in the right direction. And again, we do this in a way that is actually driven via partnerships. Collaboration is key here. There's no way that we as Mastercard can do it on our own. And I think in many ways we're seeing this idea of collaboration continuing to increase more and more. So we have a Tech for Good Alliance in Latin America. That's just an example, whereby we, alongside even Superdigital and PayPal, we're all part of the same alliance. We're driving inclusion, digital inclusion, financial inclusion, as much as we can to actually help in the economic recovery of the region. And I think in the same way, I mean, organizations as a whole just need to be more mindful about what it is that they're doing, their commitments to obviously doing better. We call it at Mastercard doing well by doing good. So it is something that is embedded in the culture, and that more and more organizations just need to step up and do, and that we can always do more, right? I mean, it's something that we're all accountable for.
And I have a hunch that this is also potentially an opportunity for some government regulation and oversight, and you know, it's even things like switching from, you know, not just requiring companies to report quarterly earnings, but also, you know, having them report outcomes and impact. You know, small things like that you know, we are what we measure, and so if we are forced to report out on those things, we will adhere to that and we will do better on those things. So I think that there are lots of ways to help hold each other accountable and responsible, because I think a lot of people have good intentions, but it's very easy to be enticed by the things that, you know, we tend to reward companies for, which are short-term profits rather than sort of long-term investments in outcomes.
And in my 2 cents, I would say also governments need to be reminded in Latin America that we need to measure and really see those outcomes, so that even civil society can take part in this, you know, keeping an eye, good citizen, all of us. I have another question, and this is for Federico. How do you see PayPal's role in contributing for inclusion in Latin America in this new landscape? More importantly, differentiating itself from so many fintechs, neobanks, and digital wallets, fueled by significant venture capital investment and with rapid adoption by new users. This is Rodrigo Valiente, Regional VP, Head of Digital for TUB Latin America.
So, well, I think one of the things that we see is as I said before, there's a very large growth happening and a very large shift to online in Latin America. So it's a market that, and it's interesting because it's really starting. Like in the scheme of things, it feels very early. So the opportunity is very large. The pie is growing very fast. And interestingly enough, so this is not a zero-sum game in any ways, right? So one of the things that we've done quite a bit and will continue to do is partner. So we partner with other fintechs. So again, we are our core is payments, online payments. Nor we intend to be a bank, for example, right? Even a digital bank. That's not who we are. Now, that doesn't mean we may not want to provide some credits to customers. And to provide my example before, we partner with fintechs in Brazil and Mexico to provide that working capital credit. So that is something that we'll continue to do. Latin America has also been for us the fastest growing region at PayPal. In the last year, where, by the way, even the US grew very fast, right? So that's a little bit sometimes the challenge in global companies, that you have the home country. In our case, the US is a huge market, and when it comes to digital, it's also still growing very fast and has a lot of room to grow, right? So how do you invest, in a place like Latin America that is significantly smaller? So, but we are, right, and we're seeing the growth of that. So first of all, is a lot of partnerships. We are also we're building a lot of products globally, but then we're localizing them in a way that they're slightly different, right? And I'll give an example. In Latin America, we've been doing installments, something that in many other parts of the world is now a phenomenon called buy now, pay later, right? So we've known this for many years in the region, and we've built tools in our platform that we can provide that service to the smallest of small businesses as well as the largest companies you can think of. So, and then finally, we also acquire companies. That's the other thing. There are times when we see an opportunity that adding something to PayPal can make us grow faster.
One last question before I ask you for your three main points to close this session. What would you like to see from the industry to contribute to the acceleration of financial digitalization of retail? Anybody?
Hi, I could bring a relevant subject that I would like to see, and I will try to support as much as I can as company, is to simplify the model that the population can spend the money in order to consume like simple objects like soaps, shampoos, or personal care items. And so if you can simplify the chain from industry to consumer, we can definitely drive the cost down. And it somehow create a model to create a positive perspective against inflation and eliminating, simplify the entire model. So, and if we could do a digital payment in between, allowing increase of pools of revenue or pools of income for low income and underbanked population, and improve the spending habits in order to simplify the industry chain to allow the population consume better and spend the money in a better way, it could change a lot, and it's going to impact a lot the real people in Latin America.
Thank you, Leopoldo. It has been a pleasure. I really enjoyed this session, especially when we're coming back from COVID-19, and this is feeling more normal, really. So thank you for your insights. But before I let you go, I ask you, how do we make this sustainable? Mention 3 things, 2 things, 1 thing if you want, that you really need for this to accelerate, to keep these, users already looking at you as the door to many more things other than just connecting to the financial inclusion, as Leopoldo just made the difference, economic inclusion and financial inclusion. What exactly do you need? I don't intend to say who goes first. Please, whomever wants to go first.
I'll say
sorry. No, go on, Kiki. Go
sorry,
on,
Leopoldo. I'll say 3 really quickly because I know we're coming out of time. So I want favorable regulatory environment, one that allows for innovation and competition. I'll say partnerships and collaboration because by ourselves we cannot do it. And I'll say new uses of data. As we think of alternative sources of credit lending, etc., I think we need to think in new and different ways to make real impact use of data.
Thank you.
Yes, from our side, I say, know the customer. We need to know people. We need to know the customer. We need to understand them. The second is actually simplify operational model to make sure they can access it, to make it sustainable in the long term. And third, care what we are doing. So we need to take care. We need to care about it. We need to understand.
Federico.
So I'll say 2 since they've said some of my thirds, but 1 would be related to sort of rigorous piloting of new ideas. I think that we need to make sure that we are understanding causal impact and that we are sort of testing and learning and adapting and using that sort of as a sort of a circuit, right? We learn something, we then kind of take the next iteration step. And so it's this iterative testing space. And then the second would be also a healthy skepticism that just because something might look like it's good for people in the short run, it might not mean that it's good for people in the long run. And I think that we need to have a healthy skepticism on some of those things because as we make it easier for people to purchase, easier for people to get credit, easier for people to, engage in a digital space, it potentially also, we have to have a healthy skepticism that people maybe also will then overspend and get over indebted. And so we have to have that healthy skepticism as we look at this so that we're looking for longer term benefits, not just the short term.
Wow, thank you, Mariel. Federico? We can't hear you. Can you hear him? Oh, there you go.
I'm left. Everything that was said was absolutely correct. So I'm just going to say 1 because everything else almost has been said. I think it's really important that we have absolute discipline and rigor when we're building customer experiences. Right? Otherwise, good intentions, good strategies die immediately.
Wow, this is contagious. I'm really excited to have had the opportunity to talk to you, Kiki, Federico, Leopoldo, Mariel. Amazing. Had the opportunity to hear your ideas. And thank you all to our audience, virtual audience that has been here this afternoon. Thank you also, Maria Lourdes Teran, for the opportunity. Have a wonderful, wonderful rest of your day. Thank you.
Thank you, Gabby.
Thank you, Gabriela.
An amazing job as always. And thank you to the whole panelists. You just mentioned them. This has been such an important conversation that we will be continuing. So thank you again, everybody, for joining us. And we hope to see you in person very soon.